using a new tool and hence a little bit of confusion. Let me know if you can hear me clearly. We'll just give people about 2 minutes, knowing it's a Sunday. So it's a Sunday morning, so I have seen a lot of people join in already, but we'll just give it 2 more minutes and we'll start. The presentation is very straight, simple. I've tried to keep it very, very specific, especially because Gift City had huge ticket sizes before. So if anybody wanted to invest in Gift City, typically the ticket size was $150,000. And as an advisor, I myself did not like recommending clients to invest it's such a big ticket size. And I was always waiting for an opportunity when something appropriate would start uh, showing up in the product lineup in Gift City. And that's what has come in the last few months. And I thought it's a good time to kind of make this presentation, because it's now going to be more relevant. And I'm going a little ahead of the presentation, but what I found was that a lot of NRIs, especially people living in Malaysia, other parts of the world, um, most likely they'll continue working here. Their children may or may not go back to India for further studies. So it's a good option for investors living in Malaysia, other parts of the world, to kind of build a portfolio, for their children education using this approach. And I'll show you this what is currently available. It's not many options, but I think it's a fairly good option. And also, what is the process? The process also is kind of, to get started. It's a little bit. It requires some documentation, but once it's up and running, I think it's a pretty seamless process. The best part is your money goes from your bank account in Malaysia, gets invested in the mutual fund in IFSC, and when you redeem, the money comes back to you in Malaysia. So you don't need a Indian bank account. You don't need to transfer money to NRI. From NRI, you invest into India, and then you bring it back. Again going through multiple loops. So that makes it very simple, straightforward. Best part is, for mutual fund investment, there is no taxation. There is no capital gains. So again, I know Malaysia has this advantage of no taxes. You can take a DT AA exemption, but that's a lengthy process. So you could probably even skip this process. So all in all, I thought this is a good option, and hence I thought it's a good time to present. So having said that, I hope I've summarized what I'm going to cover today. And if you have any questions, feel free to kind of drop it into the chat box, and I'm happy to take it as and when I find it appropriate. So I'll just kind of I have a quick question before I start off, and it's 2 minutes. So I'll okay. So screen I'm presenting. So why before I start, quick. Okay. So I have a 85% people saying they are investing in mutual funds. So this is great. Applies to you. Uh, okay. So let me kind of move on from here. So Gift City, an introduction. Before so my next slide is a bit about myself, and I won't take too much time. I founded Quantum Wealth in 2023. I'm a certified financial planner. I'm registered with AMFI for the last 3 years. Uh, I have about 100 families that I'm supporting. I look at lives under management because I think what I do impacts lives not only of investors but also their family because they have children. Their children have goals. Um, so yeah, I consider it as as a very responsible role that I play, and have client based out of almost most part of the world. So obviously, because I'm in Malaysia, I have a lot of clients from Malaysia, Middle East, Europe. I also have some clients from USA, Africa, and India. So yes, the spread is across the world, and the good part is that I've been an NRI myself for the last 10 years. So it has kind of helped me to kind of understand, the pain points of NRIs, and I'm able to kind of provide a solution in most cases based on my experience. What my services are, quantum wealth. Instead of my approach is, yes, I sell products, basically mutual fund, insurance, etc. But then it's more personalized. It's based on your financial goals. So if you look at it, it's basically any client who wants to invest, I insist that we should have a goal strategy. So it could be your life goals, could be your retirement, it could be your children education. Those are top two goals that come to mind. And otherwise, if you have any coppers to create in mind, what I my basic fundamental approach is using mutual funds because mutual funds are the best way to create wealth. Personally, I've done that. I've done that over the last 20 years. So I have been an investor from 2002, and I've walked through all the markets ups and downs. Uh, so I have created wealth by just investing. I was working full time. I never had the time to really focus on my investments. I left it to an advisor who was also my financial planner, and that's how I created wealth. Uh, if we also have PMS and AIF, and the last one is wealth protection. I call medical and life insurance as wealth protectors because as you are creating wealth, there could be instances in your life where you could either get impacted because of health issues, or something might happen to the main earner itself. So while you create that wealth, if you're able to create decent protection, then it kind of mitigates the impact of any issue that might crop up. And I'll create a presentation sometime in the future on life and medical insurance, why it's needed, how much it's needed, and even NRIs, because most of the NRIs tend not to have insurance or tend to have insurance which is not adequate. I'll move on. So Gift City IFSC. If there are any questions until now, then do drop me a message and I'll be happy to take it up. So Gift City IFSC, I think it was a brilliant concept by the government of India. Basically, they said, why should there be a jurisdiction? Why should investors come through, say, a Mauritius or a Singapore, Cayman Islands, etc.? Why can't we create uh, our own tax-free or financial center? And I think uh, it's a great idea because it creates jobs, it creates demand for real estate. It's a massive complex that's coming up. So over a period of time, this I think this is going to be a great opportunity both as a country and for the investors. So so Gift City is basically Gujarat International Finance Tech City. I mean, if we have to break the acronym, that is what it says. That the key benefits is attractive tax regime. So it's a duty-free enclave. Um, there is no taxation. Benefits are no taxation on capital gains on certain products. Also, the companies that set up their offices and whatever earnings they earn from there, those also have tax benefits. There is also no GST or applicable on firm services that they provide from there. Then additionally, something very beneficial is that if you look at regulatory and tax benefits, no PAN, you don't need to file for income tax returns. So as an NRI, you don't need a demat account, you don't need a bank account in India. As I said, you can just transfer money from your Malaysia account there and you get it back. Of course, the KYC is a pretty it's little rigid because at the end of the day, India is a signatory, to the FATA regulations, and hence the initial sign up is a little stringent. But for I don't think for NRIs it would be such an issue. So why Gift City? Yeah, the biggest one is 35 million Indian diaspora. This is from Gift City. Uh, it's got a unified regulator. So instead of having multiple regulators managing in India like a SEBI, IRD, etc., in India there is one unified regulator looking at focusing on Gift City. So it makes things, it allows them to move faster, take decisions that are more appropriate. Doesn't need to run between different government agencies. uh, Enables foreign investors to invest in India-centric opportunities. So it's a good way to kind of get money into India, with especially in some of the products which is tax-free. Obviously, it has got robust investor protection framework, so that goes without saying. Tax regime is competitive, and the best part is you can also invest as NRIs. We can also invest in global markets. There are funds available there also in smaller ticket sizes, so you can do inbound and outbound both through Gift City. Now, tax, I'll just kind of focus on the table below. Basically, if you look at tax, if it's capital gains on equity, if it's if it's in it's it's still taxable. But the good part is that there is exemption on mutual fund units. Interest dividend is taxable. Interest on bonds, capital gains on certain securities is exemption. Now I'll just come. Next is I'm going to come to the offerings, because so good question. Somebody said, do merchant navy officers can also invest? Yes, they can, because they are also NRIs. But you'll have to look at every case will be different, because at the end of the day, even merchant navy captains are NRI, so you can invest through Gift City. And this, but here it will be through your NRE account. So what are the current offerings for retail investors? So I've scanned through a lot of information, and I was able to identify 6 funds that are currently available for small ticket sizes. The first one is inbound. So that is Tata India Dynamic Fund. I have more details in the subsequent slide. It's inbound, invests into Indian equities. Currently, you can invest with a minimum ticket size of just $500 every instance. And the investment strategy is basically, it's there in the subsequent slides. They do about 60% large cap, 50 to 60%, and 40% mid small thematic. Then Sundaram Mid Cap started off a little while ago. Again, it's an inbound theme, focusing and investing into the underlying fund, which is the Sundaram Mid Cap Fund. It's a 20-plus-year-old fund. Their requirement is initially $5,000 and then $1,000 every subsequent investment. Um, and typically, the investment strategy follows the mid cap strategy as per SEBI and AMFI guidelines. And these are 4 outbound funds. So one is DSP Global Fund, $5,000 followed by $500. Current one, global allocation ex India. So the good part of DSP Global is that this fund invests in opportunities across the world, irrespective of the market. So it could be the US market, it could be China, it could be Southeast Asia. They look at the opportunity, and if they find, so it's selective. Basically, it doesn't just invest into an index. It invests into stocks they think there is value investing. So they take a value investing approach. And the last time we kind of spoke to them, they were not fully invested, because they thought the markets have run up across the world and they cannot invest in India. Then there is Edelweiss Greater China Fund. Again, $5,000, 500. Parak Nasdaq, and Parak S&P 500. These are just recently launched. They start off with $5,000, followed by $500. So there is a good opportunity to invest. If somebody wants to invest across the world, then you have DSP Global, Edelweiss, and Parak either at Nasdaq or S&P 500. So you could probably look at spreading investments over here, plus Tata Dynamic and Sundaram Midcap. Now, there are non-retail. There are also offerings for non-retail. I'll call them non-retail because the ticket size is $150,000. So Mira Asset has an inbound fund, $150,000, and they invest again across their funds in India. HDFC, Edelweiss, Nippon. So you can see there are at least 6 funds that are investing into India, into their own funds back in India. But the ticket size is $150,000. There are options. There are some funds and there are some PMS also that allow for accredited investors to invest with a lower ticket size. So, question, are you familiar with the accredited investors process, or have you heard of this term? Okay, so I have a few slides, or at least a slide telling, explaining what is an accredited investors, and what is the ticket size, and it varies, and I'll cover that when we come to that slide. So now I'll I'm focusing this conversation on the 2 funds which are India focused. One is Tata Mutual Fund, which is Tata India Dynamic Equity, IFSC. That's the name of a nomenclature for this fund. A snapshot at a high level. So retail focused inbound feeder fund. It invests into existing Tata mutual fund schemes, all focused on India. Minimum investment today is $500. This could, this is always flexible. They could probably increase it. It's a flexi cap strategy, and I'll show you why it's a flexi cap strategy. The good part is that they will dynamically rebalance, based on the fund manager's assessment. So if the fund manager thinks there is opportunity in mid cap, then they could probably, allocate higher to mid cap, lower to the other categories. So they continue to switch around. The best part is, there are no tax liabilities when they move funds within the mutual fund house. So there is no impact to you. Launch in December 25, and so that's a high level of Tata. And subsequent slides, I'll show you what kind of returns have this weighted average returns you can expect on this. So I have captured the slide from the fund house itself. It pretty much, I've summarized in the previous slides. $500. It's a feeder fund into the existing schemes. Allocation is market cap based. And core portfolio, India market based funds, index fund, ETF. And satellite, again, big range, sectoral funds, thematic funds, international ETFs, and other ETFs. But I'll go to the next slide. Okay, so this will be interesting. This is the latest portfolio holding. This was this is the May allocation. If you see this, this fund is investing. The current, if you're investing say $100, about $47 goes to the Nifty 50 index fund. BSE top quality index 10%, mid cap 10%, and then banking and financials 9.5%, consumer 10%, small cap 10%. So I would say this, this fund will to a certain extent mimic the Nifty 500 because it's pretty much spread across categories, not only in terms of sectors, but also in terms of market cap. It's spread across it. So it pretty much will have a 500 thing. So yeah, I think there is a question, from Tanu on, do we have a SIP option? See, you can do a SIP, but in India, you can set up a SIP by tying up your bank and the mutual fund, and it will go automatically. That can't happen here. Here, you'll have to manually make an investment every month, because the money is going to go from, because it's a different sector area altogether, we can't set up SIPs right now. Maybe it's on the way, but let's see when it comes up. So if you see this allocation, about 48% large cap, mid cap, and small cap. So that's how it is spread. It's spread. If you look at all the various sectors, quite a wide spread. So so it's a good fund, from top 500. And if you're planning, I have a strategy also of how it can be allocated, and it'll come up in the subsequent slide. So it'll give you a perspective of what could be the returns if you kind of follow that strategy. No, none of these funds have any lock-in period. Typically, you can withdraw when you want, but of course, they will have 1%. So if it's less than 1 year, they'll charge you 1% or 2%. They might have some penalties on it, but the money is never locked in. So what I did was, I thought to give you a perspective of what kind of returns you can get. So I've kind of each fund I have taken and captured their trends. What kind of returns have they generated? So say Tata Nifty 50 10-year returns is about 12%. BSE Quality Index is very, very new. So I think the market has not done well. So the returns are pretty poor. Tata Midcap has generated about 17% over 10 years. Banking and financial services, same about 13 to 15%. Consumer, 14 to 17%. And small cap has done about 21%. And if you take a 10-year average, so what I've done is, I've tried to look at what is the 10-year average of this fund. The returns of this fund is in the range of about 12 to 14% weighted average returns. Any questions on this fund? Otherwise, I'll move on to the next one. I just have a quick question, while I know a lot of you might have children. So I have a question, where do you intend to send your children? So majority say that it's going to be not India or Malaysia, uh, abroad. Okay. And what's your assessment of cost of education? Okay. Yeah. Yeah. Okay, great. So I'll move on to the next one. So Sundaram, yeah, mutual fund. As I said, this fund has about 23 years of track record. Again, retail focused, inbound, more than 20 years of history. Money goes into Sundaram mutual fund mid cap scheme. $5,000 minimum ticket size. Every subsequent is going to be $1,000. It's a mid cap strategy, and mid caps have historically provided superior returns. In my personal opinion, mid caps are the best segment to be invested in. It will have a lot of volatility, but mid caps are typically companies that have grown from small and micro caps, and they are on the verge of getting into large caps. And if you look at historically, data says that the best returns are generated between small and mid caps, because that's where the companies have a huge potential to grow. Large caps are pretty much white elephants. I mean, they're very, very big. They cannot grow, and hence even their market cap may not grow at the same pace. So you could look at, an allocation between a mixed allocation between these two funds, Tata and Sundaram, and that would kind of balance the volatility and provide a decent return. So this is a snapshot of Sundaram Midcap sector allocation. And if you look at the allocation for between categories, it's a mid cap fund, so 65% minimum as per mandate has to be in mid cap stocks. Currently, this is May data. Sorry, this is April 30th data, which is 71%. And below are the returns of this fund. Sundaram Mid Cap has generated about 10-year average is 15, 3-year is 21%. And it is, if you look at, it's not a top performing fund. And most of the mid caps and small caps trail their indexes. But if you look at the returns, they're fairly decent. Now, the next point is, I'm saying, how will you allocate between the two? So I just kind of did a back calculation, took a 10-year average of both these funds, and said if you're allocating, assuming say you're allocating $1,000, I'm just giving a number, and say if you put $500 to both of them, then you would probably generate a return of about 10-year back calculation, weighted average return is about 15%. And as you increase the allocation, to Tata Dynamic, which is more large cap oriented, your returns will start to drop. So if it's a 60-40 allocation, you'll make about 14.75, and if you do 75-25, it's about 14.19. So about a 1 point difference if you change the allocation, but it'll probably have lower volatility, and at the same time 14% return historically, not bad. Also keeping in mind, you'll get a dollar return which is slightly discounted, but without having the challenge of moving the money through India. Plus, at the same time, there's no capital gains on it. So this is historical data just for illustration. You'll have to check with your financial advisor, look at your goals, then make a decision. If you'd want to invest. So talking about goals, I just so quick poll on what are your current goals. Okay, so everybody says both. Yeah, I'm the only guy who has a retirement goal, no other goals. Okay, great. So I think I'll move on to the next slide from here. If there are any questions on this, then do just drop me a message in chat. I'll happy to take it. Now, how to invest? I think this is the most important piece, and I can, I can understand the challenges, or I know how to make this happen, because I recently had a Singaporean client wanting to invest for the longest time, but he was hesitant because of the ticket size in the past, $150,000, Chinese gentleman. So finally, when the option came, for smaller ticket sizes, he says, "Okay, Niyar, I can start nibbling into the India market through Gift City." But the whole idea of having to sign up a lot of pages, get it attested by somebody, then physically send it back to India, seemed very, very daunting to him. He's willing to do it, but it's quite daunting for him. So how to get started? I partner with Wealthy, and I'll talk a bit about it a little later. So we assist clients to invest in Gift City funds. There is an application form that needs to be signed. The application form, passport copy, residence address, all that has to be attested by uh, somebody, that a notary in Malaysia, or it could be your bank branch manager. I would ideally suggest just a notary could attest it. That makes it simple. We'll need a cancelled check copy either of your NRI account or your account in Malaysia, from where the funds will be invested, and the money will also come back to the same bank account. So I can help you with that investment if you choose to, and we can have a separate conversation. You could scan and register with Wealthy. A quick, I'll just leave this for a moment because it kind of allows you to then okay, I'll move to the next slide. So the investment process at a high level, you know, once we go through this documentation process, uh, the papers are sent to say Sundaram or to Tata. They will create your folio just like they create a folio in India also. For money that you route through India, they'll create a folio. Once that folio is created, that's when you will then uh, send this money from your bank to directly to that fund house. So the the fund manager will give you the account number, the bank details, what you need to quote over there in terms of your folio number, so that the money can then get deposited into your specific folio and invested. So typically, if you're investing in India currently through a platform or through your demat account, you just kind of set it up, and the money goes from your bank account to your folio. From the folio, it comes back to your bank account. There is an intermediary who does all, provides you with a technology platform which enables you to do it. But unfortunately, right now, that's not up and running for Gift City. So this will require some bit of manual work till they're able to they're able to replicate the system that they use back in India for the internal investments. So as I said, after the folio is created, investor will receive email with bank account details to emit funds in USD to designated fund collection center. So if the minimum ticket size is $500, you'll have to remit $500. Whatever is the cost in terms of exchange rate, etc., is something that you'll have to bear. Once the funds are realized with the fund house, units will be allocated, and you'll receive statement of account via email. If you're with Wealthy, right now none of these fund houses have an active website where you can go and check your investment. You'll only get your statements. But Wealthy has an app, so we are able to pull data from the RTAs and show it on our uh, app on a day-to-day basis. So that reporting, you'll not be able to transact, but at least you'll be able to see the value of your funds on an ongoing basis. And redemption process, same. You apply for redemption, and the money comes back to you. So there is again you'll have to send a redemption form via email. The money it'll be processed on the next business day, and the money will come back to your bank account, which is registered. So if it's your Malaysia bank account, the money will come back to you to your Malaysia bank account. Any questions on on this process? Okay, so there is see on charges, we will not. Are you talking about fund charges, or are you talking about conversion and remittance charges? So fund charges, the fund will charge about 2.5% AMC fees. Both are charged. Both the funds have 2.5%. They call it as fund management charges. Currently, it's 2.5%. Remitting, you can remit your MIR, but when you remit from your Malaysia bank account, you will say, I want to remit. You can remit either in Singapore dollars or in US dollars or in euro. You'll have to select dollar USD and specifically make it 500. So I hope I have answered the remittance of money to the fund. The next question is on redemption. See, redemption, I will clarify. I did not see any lock-in period. So when you're redeeming, It is same like India. When you're redeeming, the next day the fund will process your redemption, whatever is the NAV, equal, and that money then gets converted to dollars and it's remitted to your bank account. So I guess when it comes to your bank account in Malaysia, it'll come back to you in MYR. So there will be, whenever the money is remitted from there, there will be some costs that will be incurred, but they will remit the dollars to you. So, and whatever is the conversion charge, those finer details I can come back. But at a high level, this is how it will get processed. So good. I mean, I've got some good questions. If I'll come back, on some of this. I'll clarify at a high level. I've understood, but I'll clarify if there is something different from what I'm saying. Any other questions? I'm happy to take the. I'll be happy to answer. No, I'll move on then. So, so my analysis, positives and not so good. Uh, Positives is a dollar denominated investment, tax exempt for mutual funds. So any investor who lives in a country with zero capital gains, Malaysia is example, it's beneficial. So, and definitely the government of India has a huge focus on gift city. So there is no question of there going to be flip flop uh, on the existence of gift city. It's a long term game. No hassles of PAN bank account in India. And it's also beneficial for NRIs who want to settle abroad. Not so good. Um, I said limited options. As I said, underlying performance, both these funds are not the top performing funds. So they lag against competition. They're not in the top quartile. They're probably in the second quartile. Any considered investment of 150K, if not timed right, that can be a painful process. Uh, if you're coming back to India, in short term, I mean, that may not be the plan, but if something goes wrong and if you have to come back, it will impact your investments. And you cannot set up SIP as uh, as how you do, back when you're investing from India itself. Correct. So there is a question, that see, you're sending money in dollars. So that's a good point, and I was going to come to that. That people think that you're investing in dollars, you're getting back dollars, but the conversion is going to happen. So when you're investing, say when you invest money right now, it is at 95. So your money gets converted to INR and it gets invested in India funds at 95 rupees. When you take the money back, say you make a return of whatever, and if the INR versus dollar is 105, then your conversion is going to be at 105. So that the amount of dollars you'll get is going to change. So uh, there is going to be an impact of conversion both ways, investing and redeeming. The only benefit is that you don't see that, and the second is that the money is tax free. So I'm dollar appreciation. No, if the dollar appreciates, then you need more rupees. So basically, yes, it'll not be you'll not get the benefit of dollar appreciation because the money is going into the country, getting invested in rupees. So that's an issue. That's definitely an issue. So it's not yeah. So what you said is right. It's you're not getting the benefit of dollar appreciation. So accredited investors have there is opportunity for investors to invest less than $150,000, and the eligibility criteria, is I put it up over here. It is quite stringent. So basically, any individual can do it, assuming everybody is an individual. There are certain criteria you have to meet. Either you have an annual income of over 2 crores or a net worth of 7.5 crores, out of which at least more than 50% is in financial assets. Your over here, your home is not counted. Your first home is not counted as your for the qualifying criteria. It's not included. And if your annual income is over 1 crore plus net worth of more than 5 crores, then at least 2.5 crores in the form of financial assets. So this is the latest guideline of for credit investors. You need to provide all these documents. So basically copies of income tax returns, or it will be copies of your, if you're a businessman, then your financial statements, or the last could be net worth certificate from a practicing chartered accountant. So these are the basic criteria for investors who want to take that term of accredited investors, and then manage with lower ticket sizes. So I've covered, so my whatever I have to cover on Gift City accredited investors is covered. A quick brief about, and I'll just take 2 minutes here. Uh, I partner with Wealthy. So I'm coming back to my business. I partner with Wealthy, which is a platform based out of Bangalore. Uh, the platform has about 10,000 crores of assets under management as of latest update. About 7,000 partners like us, and it's a purely B2B service. They don't go directly to customers. They support partners like us who bring the customers on the platform. Now, it's a fully digitized operation. So, even if you have to do your KYC through Wealthy, we do it digitally. That is for your regular investments. For Gift City, we'll have to follow the process. Uh, the good part is that if you're investing through me, then there is expert guidance, there is goal-based investment strategy, proactive monitoring of your portfolio, and available on a WhatsApp, just a call away. So you can call me anytime for any consulting, any guidance, any questions. We'll be able to answer. I'll be able to take that up. And a brief about Wealthy, I said it's about the AUM is about 10,000 crores now, about 100,000 clients. They have a presence in almost 25 cities as of now. And the products that are offered through Wealthy through regular India-based investment is almost the entire whatever you need from a financial services strategy. Everything is available: mutual funds, PMS, stocks, AIF, SIF, and of course it's got all the licenses. So it's a AMFI registered distributor. It's got RDA license for insurance. It's a SEBI registered stockbroker and research analyst. So it's a full service platform, and through which I leverage their services for my clients. And I think our approach is that India and NRIs deserve financial guidance, but today wealth management reaches only a few. So we are here to serve you. Yeah, Gift City. Yeah, so there is a question from Manish Mehta on Gift City FDs. Unfortunately, no, we don't have that option right now. At least I don't have that option through Wealthy on Gift City FDs. Typically, I would suggest you could go for FDs directly to the banks. I know there are some platforms that offer bank FDs, etc., through their platform, but unfortunately, we don't have right now. So I run a Telegram channel. You could consider, scanning the barcode, joining the channel, because we continue to provide updates on a very regular basis. I'll continue doing seminars, but I'll be happy to conduct, but you'll get updates over here if you're on the channel. So here is the barcode. You could scan and join in. Any other questions or any other topic that you would want me to cover? Then I can think about. I'll cover that in the upcoming sessions. No. Okay, then if there are none, then I think I'll call it a wrap. Thank you so much for joining in, and I'll keep you posted on upcoming sessions. Thank you so much. Yeah, you have a good day. Bye bye.